Welcome back to Investing Talk Podcast. Today we are taking a close look at Recursion Pharmaceuticals. We've gotten a lot of questions about this one specifically. Is now actually a good time to buy this stock? It's a fascinating company, really trying to use AI to completely change how drugs are discovered. But that definitely puts it at the, let's say, extreme end of the risk-reward spectrum. Before we jump in, just a quick reminder, please hit subscribe, like the show, and maybe leave a comment below. We really do love hearing from you. And hey, if there's a specific company you want us to look into next, just drop its name in the comments. We'll add it to the list.
Okay, so our mission today is pretty straightforward. We've gathered analyst reports, looked at the recent financials, insider trading stuff, even technical charts to try and give you the full picture. Recursion is, it's a classic case, really. You've got this incredible technology story, but then you see the financials. There's hemorrhaging cash. So we need to sort of untangle that bullish potential, the tech side, from the pretty serious financial pressures they're facing.
Right. Let's get straight into that paradox then. Because the skeptics, they really hammer on the financials, don't they? And when you just look at the numbers in isolation, well, it's not pretty. Q2 showed a huge operating loss, what was it, $176 million?
Yeah, something like that, a big number.
And the annual trend isn't getting better. The net loss actually jumped 41% year over year. We're talking negative $463 million or so in the last fiscal year. That's a startling amount of money to lose.
It is startling, no doubt about it. But look, we have to provide the context here. For these kinds of companies, innovative clinical stage biotech focusing on building out a platform, you almost have to temporarily ignore the standard P&L statement sometimes.
Ignore it. That sounds risky.
Well, not ignore it, but understand why it looks like that. This kind of negative margin is actually pretty typical. It's almost expected when they're going all in on hitting expensive pipeline milestones and rolling out next-gen tech like their Recursion OS 2.0. Think of it like they're building this massive high-tech factory, but they haven't started selling the products yet. Of course, the initial costs are huge.
So you're saying the high cash burn is just the price of admission for trying to be a first mover in AI drug discovery?
Precisely, yeah. They're spending like a major R&D division at a big pharma company, but they don't have billions coming in from existing drugs to cover it. And that spending, that's what makes investors nervous. It raises the obvious question, how long can they keep this up?
Okay, and that brings us to another, maybe more psychological point we found digging through the sources. The insider selling. This definitely looks like a red flag. We saw significant selling, especially from the CEO, Christopher Gibson, totaling what, nearly $4.7 million recently, like last fall.
Yeah, that trend is something the market watches like a hawk. Those sales kept happening, and maybe more importantly, we found zero recorded insider purchases over the last 6 months. Zero. Right. It immediately ramps up the debate about management's own confidence. I mean, it's tough to pitch the stock when the CEO, the person who should know the most, is consistently selling shares.
Yeah, it makes you ask, are these sales just personal diversification? Or does it signal something else, maybe a lack of conviction about the next year or two?
Exactly that question. It's a headwind, no doubt.
Okay, so that insider selling pressure is real. But let's pivot, because to counter that feeling, you have to look at the balance sheet, the actual cash situation. On the growth side, the foundation looks, well, stronger. Revenue growth was actually pretty robust, up 32% last fiscal year to nearly $59 million. That's decent expansion, mostly from partnerships, right?
Correct. Partnerships are key there. And that growth, even though the base is small, it's backed by what looks like pretty solid cash resilience. This is the crucial counterpoint, really. Recursion holds about $533 million in cash and equivalents. Now, given their current burn rate, that does seem to provide a runway through late 2027, maybe even into 2028.
For several years.
Several years, yeah. And for an unprofitable biotech, having that kind of cash stack is, well, it's everything. It means they can likely survive a few bumps in the road with their drug pipeline without immediately needing to raise more money, which would dilute existing shareholders.
Okay, so the cash buys in time. The critical question then becomes, what are they actually buying time for? What's this technological moat that supposedly justifies the risk and the losses?
Right. The time is being bought, essentially, to let their technological advantage really take hold and hopefully start generating results. Recursion is, by most accounts, considered a leader, maybe the leader, in AI-driven drug discovery. Yeah. They definitely have a first-mover advantage with their integrated platform, this Recursion OS 2.0. But the real moat, the thing that's hard to copy, it isn't just the software, it's the data.
Okay, let's pause there. The sources mention 65 petabytes of proprietary biological data. 65. Petabytes. What even is that? And they talk about a phenomics approach. Can you break that down?
Yeah, great question. So a petabyte is 1,000,000 gigabytes, 65 of those. It's just a colossal, almost unimaginable amount of information, proprietary information. Basically, think of it as hundreds of billions of high-resolution images and measurements of human cells reacting to different chemicals or genetic changes. They're capturing data on how the entire cell system responds, not just looking at one specific protein like traditional methods.
Ah, okay. So that's the phenomics part, studying the whole observable effect.
Exactly. Phenomics is the study of the phenotype, all the observable traits of an organism, or in this case, the cell.
Yeah.
So instead of targeting just one bad actor protein, their AI analyzes these vast data sets to see the holistic effect of thousands of compounds on living biological systems. And crucially, this data set is unique because they generated it all themselves, in-house, using standardized methods. That consistency is key for the AI. So the sheer volume, the quality, and the integrated AI pipeline, that creates a pretty significant barrier for anyone trying to catch up. That's the core of the long-term bull case.
Okay, that makes sense. If the moat is potentially that strong,
Yeah.
how is the market processing this whole confusing picture? You've got the moat, but you've got the losses and the CEO selling. What are the analysts saying?
Well, the analyst targets are really diverging, which kind of reflects the confusion perfectly. You've got folks like Gil Bloom at Needham who are very bullish, maintaining an $8 target. That suggests huge confidence in the AI platform eventually delivering big wins, either drugs or partnerships.
$8. Okay.
But then you have others, like Morgan Stanley, being much more cautious. Their target is more like $5. They're clearly weighing those financial losses and the future capital needs much more heavily.
Wow, that's a $3 difference on what's currently like a $5 stock. That's massive implied volatility in those estimates. But what's the overall consensus? Is it leaning buy, sell, hold?
Despite all the risks we've talked about, the consensus rating is still generally a buy. The average price target seems to be hovering somewhere between, say, $6.47 and $7.25. So analysts covering it generally see upside, maybe 33, 36% from current levels.
Interesting.
And what's really fascinating is when you look at institutional activity, the big money, it looks like major funds have been either holding steady or actually increasing their positions on dips. This is that classic accumulation on weakness idea playing out.
Okay, for listeners maybe not familiar, what does accumulation on weakness really mean in practice?
It basically means that the big institutional investors, the hedge funds, the pension funds, they see the price drops maybe caused by those earnings losses or the insiders selling news, not as a reason to panic, but as a chance to buy more shares at a discount. They're betting that the current price weakness is temporary, and the long-term trend driven by that AI story is still upwards. And interestingly, retail sentiment online seems pretty positive too, especially around news about the platform itself.
Right, timing is everything in investing. So if institutions might be accumulating, let's look at the technical picture. Is the chart supporting that idea? The stock closed recently around $4.85, seemed to be stabilizing a bit after some bumps. Where are the key levels to watch?
Technically, yeah, there seems to be a pretty strong support down in the $3.84 range. Historically, when the price gets down there, buyers tend to step in quite quickly. On the upside, the resistance, where selling pressure tends to pick up, looks like it's in the $6 to $6.50 zone. Getting convincingly above that would be a pretty bullish signal.
And what about recent momentum? I saw notes that the stock recently got back above its 50-day moving average, and some momentum indicator called the Omani-D turned positive. What does that tell us, in simple terms?
Yeah, that's potentially significant from a technical standpoint. The 50-day moving average is a widely watched indicator for the medium-term trend. Getting back above it suggests the stock's short-term health might be improving. And the MARID, that's moving average convergence divergence, it's just a momentum tool. When it crosses above zero or turns positive, it basically signals that the short-term price momentum is picking up steam relative to the longer-term trend. Traders often call that healthy bullish momentum. It suggests the worst of the recent selling might be over, for now at least.
Okay, this timing matters because the next, 3 months or so look absolutely packed with potential catalysts, things that could really move the stock. What are the key dates or events people should have on their radar?
Yeah, the next quarter is critical. We've got three big things coming up. First, obviously, is the Q3 earnings report. That'll probably land late October, maybe early November. We kind of already expect the losses to continue, right? But the market will be laser-focused on what management says about that cash runway and any progress on controlling the burn rate. They need to reassure investors.
Makes sense. What's next?
Second, Around November 15th, we get the institutional 13F filings. We talked about insider selling. Well, these filings are the other side of the coin. They show what the big funds, the smart money, were actually doing buying or selling last quarter. This will be the proof, one way or the other, for that accumulation on weakness theory. Did they really buy the dip despite the CEO selling?
Crucial data point. And the third one.
Third, later in the year, probably around late December, is the anticipated holiday pipeline update. This is more speculative, but potentially very impactful. Yeah. Any positive news here? Maybe a breakthrough from the AI platform finding a new drug candidate? Or significant progress in clinical trials for existing drugs like REC-2282 that could really reignite enthusiasm and cause a sharp move upwards.
And beyond those scheduled events, we can't ignore the, let's say, more speculative rumors that always seem to swirl around companies like this. What's the chatter about potential partnerships or even M&A?
Yeah, that talk seems pretty persistent.
Yeah.
Given that unique data asset, those 65 petabytes, a lot of people think Recursion is fundamentally undervalued just as an acquisition target. The market chatter often hints at maybe a new, big strategic collaboration with a major pharmaceutical company. That would bring in cash, yes, but also huge external validation of their platform.
Or even bigger, there's always the M&A speculation, right? That maybe a larger biotech or even a big tech company wanting to get into healthcare AI might just decide to buy them outright.
Exactly. Some analysts argue the platform alone, just the data and the AI, is worth more than the current market cap. If any credible M&A interests were confirmed, you'd likely see a very rapid, very significant jump in the stock price.
Okay, so let's try to pull this all together. We've got this amazing AI tech and data moat, but huge losses. We've got insider selling, but potential institutional buying. We've got a long cash runway, but pipeline risk, and near-term catalysts looming. What's the final investment thesis here? How do you rate the potential?
You know, when you connect all these, frankly, conflicting pieces, but view it through the lens of this massive secular shift towards AI and drug discovery, the thesis actually lands pretty firmly in the bullish camp, I think. We probably rate this an 8 out of 10 for investment potential right now. But, and this is important, it's a specific kind of investment. It's not for the faint of heart.
Why an 8 now? Why not wait until the picture is clear? Maybe the losses start shrinking.
Because the risk profile feels somewhat stabilized at the moment. You've got that combination of the proprietary tech, that huge data moat, and that multi-year cash runway. That significantly lowers the immediate risk of the company just failing. At the same time, you have these clear catalysts coming up in the next few months, earnings providing clarity, 13Fs showing institutional conviction, potential pipeline news. These create opportunities for maybe shorter-term trading gains, but they also reinforce the long-term investment case tied to the whole AI revolution in pharma.
But anyone thinking of jumping in needs to actively watch the downsides, right?
Absolutely. You have to monitor that cash burn. If it suddenly accelerates or if management sounds less confident about controlling costs, that's a major red flag. And look, clinical pipeline risk is always there in biotech. A setback in a key drug trial, or maybe a big partnership falling through. Those things could still cause sharp drops, no matter how good the AI platform seems on paper. This isn't a buy and forget kind of stock.
That's a really clear summary of what is definitely a complex, high-stakes situation. But I want to leave our listeners with one final question to chew on, something to think about themselves. Given that persistent insider selling from the top, does the institutional buying, this accumulation on weakness, maybe just reflect confidence in the acquisition value? Are the big funds simply betting that someone else, a big pharma or tech giant, will eventually buy Recursion for its platform and data rather than betting on Recursion's own ability to become profitable as a standalone company 5 or 10 years down the road? It kind of raises a fundamental question about the company's ultimate path, doesn't it? And that's something every potential investor really needs to consider carefully.